Hey, what's going on, everybody? I apologize. We're running a little bit behind here. I had some technical difficulties. Again, I like to say, I'm old enough to remember when they promised us that all this technology was going to make life easier. But instead, it seems like we just have more and more issues, right? So anyway, yeah, good to see y'all here. It's Friday. What is today? The 26th, I think. Let me check here. Yeah, 2025, 26th of September. So coming up into the final quarter of the year. And are you not entertained? I mean, I guess not, because every time I turn around, some Yahoo online is talking about some news event that's going to make all the difference in the world. And none of it really does, right? Because as we know, price dictates. These fundamentals follow, right? Your news events are telling you what has happened, not what's going to happen. So just some thoughts to keep in mind there. We did have today, of course, what do we have? We had the PCE today. And then we also had, what is that? The options expiry. Options expiry. So we'll talk about that as well here. We'll look at some charts. We'll talk about, let's see here. Sat says, I saw a bunch of Bitcoin options expire today. Record amount, I believe. Yeah, it was quite a bit. It was quite a bit. So we'll talk about that. We'll look at the Bitcoin, Ethereum charts, the Ethereum versus Bitcoin chart. If you guys haven't looked at that lately, you're in for a treat there, I think, maybe. We'll look at Tesla, MicroStrategy, or strategy as it's called now. Maybe a few others as we continue to go on here. All right. So do me a favor real quick. Hit the thumbs up, hit the like, hit the share button, guys. It just takes 2 seconds, a few pushes of your button to do. So I would appreciate that if you could do that. Let's see here. Let me get my notes. So let's see here. We did have, again, options expiry today from Bitcoin and Ethereum. Let me see. Was about 22 billion in options were expiring today. Of that, Bitcoin was 16 to 17 billion in notional, and then Ethereum was the other, 5 billion or so on that. So, the dearth of the options were Bitcoin, smaller bit to Ethereum, but still a lot in there. And we'll talk about what that means here in a minute and why that's important. The put to call ratio leans toward calls. So there's more call volume, which means more options, more options for buying, right? But some data shows a 13% 30-day delta skew where puts are relatively pricier than calls in the more recent Bitcoin's option data. So what does that mean? That means for Bitcoin, your max pain price level is right there around 110,000. And for Ethereum, it's about 3,800. All right. So, we are above those levels right now, and we'll continue to see how that holds up here. Now, one thing I've talked to our students about at the Academy this week was this idea that we did get sell-offs, toward the end of the week and through the week as we came through, especially just the other day. As we got toward the end of the week, maybe more of a capitulation there. So with all that happening, then coming into today where we had the PCE, which, by the way, the PCE, if you guys don't know, everybody talks about the CPI, but the PCE, which comes at the end of the month, is actually the Fed's preferred inflation gauge. So the Fed watches core PCE more than it watches CPI, stuff like that. So it used to be CPI, but man, that's already been almost like 15 years ago. I think it was like 2011 that the Fed changed to the PCE, but you still see that the journalists out there, right, and your large accounts still talk excessively about CPI. But PCE is what the Fed watches, especially core. And guess what? Today, both headline and core PCE came in as expected. No surprises. It didn't come in soft. It didn't come in hot or cool or hot or whatever. It just came in right where they expected it to be, which, by the way, is still rising, right? You're still looking at 2.7 and 2.9%. So, as long as PCE, CPI, stuff like that are above zero, inflation is still there, guys. The only way it doesn't, the only way we say inflation isn't there is if those numbers drop below zero, right? So even if it came out to like 1% or 0.5%, there's still inflation. And I say that because people say, oh, look, it came in soft or it came in line, but my prices are up over the last year. I'm like, well, yeah, because inflation's still continuing to rise. It's just how fast are we expecting it to rise? And again, like I said, right now, your headline and core CPI or PCE both came in line with expectations. So no surprise there, which means no exaggeration of dealer gamma there on the options expiry, which means what? Well, it means here we are, right? And we'll look at the charts and see where we are and where we may go. But again, those max pain kind of levels where you see things really start to happen are estimated around 110,000 or so for Bitcoin again, and 3,800 for Ethereum. Let me see here. So what does that mean? That means, so if we're getting basically a breakdown below, 108,000 or so, you could see Bitcoin kind of cascade into some forced liquidations. And that's going to be especially significant if option sellers are forced to roll or cover hedges. But, I think we've already, I don't know, I'd have to check. I don't remember if we've already had the options happen or not. I think we did. I think we had it already happen earlier, which would mean we wouldn't have to really be looking at that, right? But if you're getting above 112,000, that would force the call sellers to buy back, lead to maybe a short squeeze kind of idea. And then if Bitcoin closes around that 110,000 area, that max pain area, many of the option buyers are going to expire worthless and option sellers collect premiums. So a relatively neutral outcome, right? So we've had some volatility since the PCE print, but it's just kind of been up and down, more so in our indexes than we really had with crypto, though, or with Bitcoin. Bitcoin is still kind of in this range bound thing that it's been in for, this week now. And so we're just kind of waiting for a breakout or a breakdown from that area. Let me see here. Yeah. So headline PCE was 2.7%. Core was 2.9%, again, as expected. Personal income and disposable income, they both rose 0.4% month over month. Personal consumption, current dollar increased by 0.6% month over month on there as well. Let me see here. Yeah, so now what we're looking at, a lot of times after you get that expiry, your markets are going to sometimes, a lot of times, see like a directional move because that liquidity and that hedges are going to unwind. So, we're kind of looking for that. So my thought was, as I was telling, our students over the academy, is we've got this pullback during the week. Today's Friday, or Monday, we might see a reversal happening. And so that's kind of what we're looking at, right? Do we see today, going into the weekend, or at least on Monday, do we see some meaningful reversal happening? And I think there's a much more likely possibility of that than not, but we still have to see it happen, right? It doesn't matter what my personal thoughts are. We don't trade on what our personal thoughts are. We trade on what the markets give us, right? Y'all know that, right? You know better than to just trade because you got some gut feel. I hope you do anyway. Yeah, so you need a belief or an understanding that says, I think price may do this or that, but you shouldn't be trading on that. You should be trading on, okay, if I think this is going to happen, then at what level, at what point does price cross through that makes me more right than wrong? You see what I'm saying? Most of the time, retail traders get in and they're like, oh, well, I think it's going to do this, or I think it's going to do that, and then they trade. They don't let price tell them, or at least, I don't know. They don't let at least give them some kind of confirmation. Does that make sense? And so, but that's what you should be doing. You shouldn't just be going into something because your gut says to do this or that, or there's a fear of missing out, right? That fear is what causes you to lose a ton of money, whether that's fear, because it's dropping, or fear of missing out as it goes up. In life, we react much more strongly to fear than we do to greed. Those are the two strongest emotions psychologically, right? But your fear is significantly more than your greed, okay? By the way, we still got one more position open real quick here. I'll mention this at our annual with the 55% off. Use the code 550FF. You can just click on the QR code up there at top. It'll take you right to the page where you need to go. But we've got one more on that. So if you get there and you try to do it and it doesn't give you the 55% off the annual liquidity cartography there, well, you waited too long. You effed around, you found out, right? But anyway, so yeah, so new feature for StreamYard here where we have these QR codes. So I may be putting different things up there, different shows, give you guys direct access to things. Maybe some things that nobody else has a link to sometimes. Ooh, so you're gonna have to try it out constantly, right? Anyway, listen, guys. So here we are. Let's go ahead and pull up what we're looking at here with Bitcoin, right? Gonna do something like this, maybe. See if I can make the screen a little bit larger here, maybe a tad bit. Excuse me. All right, well, there we go. And so still kind of looking at this the same way. Nothing's changed at the moment here, but we'll see if we can get this rally, right? So like I said, for the last bit here, we've been kind of doing this sideways here. I said last few days, really it's been since what, yesterday, right? You can come here, you see the sideways right here. And so we're kind of waiting to see, can we get that move out? Now the 4 hour says, hey, yeah, you might just be able to get a move and break out here, higher here. But we've got to see if we can get it. We've got this big 4 hour fair value gap right here. So what do you want to see? Really what you want to see is a 4 hour close above that point right there, above on this chart here, this Bitcoin USDT, or this Bitcoin all-time history index. Right above 110, 713, and 96 cents. You want to see a 4 hour candle close above that because that will then neutralize this bearish fair value gap right here and suggest further upside. So really locally, that's the main thing you look at the moment. Now, you can see that we had a bit of volume here on this doji candle, the last 4 hour doji candle that just closed just over 20 minutes ago, this one right here. Now, I like that. It's a higher low. It's got a large upper wick, but we're pushing back up into it, suggesting some additional clearing of this way here. So we've got a good reaction after this big candle with this big volume here, big candle, but large upper wick with all this volume. So, you know, again, closing above that would be probably your nearest kind of indication that maybe that low may be in down here. So that's closing here above 109, 853 and 62 cents on the 4 hour. But again, getting a 4 hour candle close above 110, 713, 96 really starts looking like that low's probably in and we're headed up. Now, what do we really need? What we need from the bigger picture here is we need a breakout above this 114, 042 and 32 cents. If we can get above that, that should indicate that the pullback is complete here. And this is a 1 and a 2. And that should have us headed out higher. Now, in that case, let's kind of zoom in here a little bit more. That would give us then, let's see here, if we look at that as a 1 and a 2, they give us a minimum expected wave 3 target. Whoops. Up there around 126, 550 or so. And then 5 waves up around 131, 165. So if we can get breakout above 114, 042 and 32 cents, I think that leads us to a pretty good likelihood of rallying up here, at least around 131, 165 is kind of that next move up. I really like the chart so far. You know, really all we did was pull back into this previous resistance as support. And so now we've got some biggish volume coming on a 12 hour. Again, possibly capitulation coming down here. But here's the really interesting thing on the 12 hour. Again, you can see here, this is the most volume we've had since this one over here on July 24th, which was this bounce and this push higher here before pulling back, right? So again, potentially capitulation at the end of this move down. Your next candle, look at that, almost the same amount of volume, but look what happened here. We had a large bearish candle here, supply candle, closed near the low of there. And then we flipped it to this doji where price closed above where it opened. Almost the same amount of volume. So basically, effectively, basically the same amount of effort. But not only did you not have all this result, you had a negative result. It closed up. So very important thing to watch. So I like that 12-hour there. This current 12-hour candle, another 7 hours and 34 cents left. And look at this. We're almost halfway up into that volume as well. So a lot of volume coming in right here around this 108, 109 area. Again, right around that 110, which was the max pain. So having those option expiries around there, PCE data came out in line with expectation. I think there's a good chance this may be the low here. We'll head up, but we still need it to actually head up. We need it to actually go. So that's what I'm watching for, with those target areas being where I'm looking for to give me more confidence in that idea that it's heading up, right? So if we jump over here with Ethereum on there, let me see here. What do we see with Ethereum then? So Ethereum kind of doing the same idea here, pulling back to the previous resistance, the previous range resistance as support, right? Looks like we've printed a spring here. Again, we've got capitulation type volume coming off on this downtrend. And so here we go, getting the bounce. We said that 3,800 was kind of the max pain area. We're right above that here. So again, a good possibility this thing's going to rally up here. Now for this one in particular, we have like 3 waves down and then 1, 2. So A, B, and then 1, 2, 3, 4, 5 here, it looks like. So it looks like we do have a double zigzag here. So in terms of that, we need a breakout above 47.68 and 60 cents to add confidence to the idea that pullback here is complete. And based on the height of that pullback, that'll give us a minimum expected target up here at 58.09, a pattern target, not a minimum expected, but a pattern target based on the height of that at 58.0912. So, that's what we're kind of looking at. And now I'm still looking higher after that, but ultimately, just looking at that pattern target right there. Now, what can I do? Well, locally here, I'm interested in a breakout here above this swing high. So again, remember, I'm talking about this being A, B, 1, 2, 3, 4, 5. So really kind of looking for a breakout here above 42.33 as the first real clue that low may be in. And then the next step you want is a breakout of what would be wave B of Y here at 46.81. If you can do that, the odds are you're going to break out above 47.6860. That's going to confirm that, as we see here. And then we'll be looking up again toward that 5,800 pattern target as my next target to the upside, right? So again, Ethereum here looking really clean, really nice on the pullback there. Similar to what we're looking back here on Bitcoin with its pullback to the previous range resistance area as possible support here. Now, if we do break down below this swing low on Bitcoin, we'll look down here toward 102,400 or so as our next target. And then we'll have to reevaluate from there. But for now, as long as we're staying above this swing low here at 107,300 some change, we should look for it to potentially break out higher. And again, popping out through there gets us with that higher move. So what about Ethereum, Bitcoin? Well, God, guys, look at this. Look at this move. The last time I talked about it was the idea that we had a 1 and a 2 here. And we were looking for a minimum expected wave 3 target at 0.04010. Guess what we got? We got this here. So at this point, it looks like 1, 2, 3, 4. And so 5 should get us up here near descending resistance area. So we're just a little bit above that 1618, which means the 38.2 is a little bit above this 100 here. There we go. At 0.03284. That's a 38.2 pullback. That's our initial target. Followed by the 50% is our secondary target at 0.03029. Now, if we can rally off that initial target, that'll give us a 5th wave pattern target up here at 05017, which is what? It's the EQ area of this large range. Of this large range right here. So 5 waves up into that, we pull back, and then we break out with a wave 3 through the descending resistance, through the EQ there. So the idea, that we would look here is maybe something along these lines here. So we'd be doing a wave 4 right now, ultimately down here, and then wave 5 maybe up here. And then we should get a 3-wave pullback down to around this same area. And then the breakout higher. So let's see here if we can get these targets. 50% kind of, I think it could go a little bit higher here toward this descending resistance, but if it just does this, again, we'll get that little bit further pullback, kind of to the top of this low volume node over here. And then that would have us looking for a 3rd wave. Up here, right up toward these highs up here, right there around 0.15959. This will get us kind of around that all-time high for Ethereum versus Bitcoin. And then, we'd pull back a little bit here, and then we'd be looking for minimum wave 5 up there at around 0.237. So, yeah, so I think we'll probably get some further pullback, Ethereum versus Bitcoin. Now, what does that mean? Does that mean Ethereum has to pull back while Bitcoin goes up? No. All that means is that Bitcoin goes up faster than Ethereum. Does that make sense? Is there any way to move that Q code over there? I don't think so. That's where they put it. Give me a minute here. Let me see. If I can maybe change this here. No. Nope, it looks like that's where it's at. But I told you what the chart was. It's Ethereum against Bitcoin, Ethereum / BTC. Yeah. I wish they would let you put that somewhere else, though. But maybe I'll dig into it further and see if we can see it there. I mean, I could always do it like this, but then you've got a smaller chart there, right? I mean, if you guys are all right with that, well, hey, there we go then. Or again, look at something like that coming up here. So yeah, so Ethereum can run up with Bitcoin, but it's just Bitcoin, moves up faster, and that would keep, this Ethereum kind of falling back here versus Bitcoin. Or Ethereum can kind of do some sideways, it doesn't have to pull back while Bitcoin goes up in order for for Ethereum to pull back here against Bitcoin on there. Okay. So, but man, look at that move, guys, though. That move, look at that. That we had a bigger pullback than what I thought we would have had here, but ultimately staying above that swing low and getting this move up here. So pretty crazy there with that move down, and nice bullish engulfing candle here off the swing low. These are monthly candles, by the way, here, guys. So the last 2 months prior to the current month, we've had Ethereum outpacing Bitcoin, which of course we know because we had the big move up, right? All right, are any of you all in Ethereum at the moment? Or have any plans to get into it? Anything like that? Let me know. Y'all are in Bitcoin though, right? Or are you buying the nonsense that, I can't get rich off Bitcoin, so I shouldn't buy any? Missing the whole idea behind Bitcoin. You're in Ethereum sats? Man, see, my thing about Ethereum is I've got so many people, right? And they've complained about it being up here, but I talked about getting in it down here. And that we kind of just went a little bit above that target there, right? That was a 31R trade right there. Right back over here in April. The breakout, right? But, again, I've been talking this entire time when it's pulling back. Everybody's crying about it. I was like, don't worry. We're just pulling back. We're going to break out to a new all-time high. And we got it, But everybody, you got to be careful online, guys. Because even if you're not initially kind of, emotionally down in the dumps or whatever, doesn't mean you can't be pulled that way by a lot of negative sentiment that you find, in social media online. So a lot of people listen to the nonsense here rather than plotting a strategy on buying coming up. And then when I was talking about buying here, people told me, no, it's dead, it's going lower, and that's all. I don't think I remember even anybody saying, yeah, that's a great place, I want to buy there too, but here it is. And that was from April, guys. I mean, this was price appreciation of 100, almost 200% from, near the end of April until up here. Let's see, we hit target right here around mid-August. It's just a few months. Like I said, 31R, if you got into that trade with me, you made $31 for every dollar that you risked. Okay? So if you put $100 in there, you made what? You made 3,100. If you put 1,000, you made 31,000. If you put 100,000, you made 3.1 million. Right? That's how you trade, folks. Stop worrying about your target, how many actual dollars you're going to make. The only thing that matters is your risk-adjusted return. That's all that matters. How much are, you going to make in relation to the risk that you're taking on? Okay? Because here's the thing. I see traders all the time that they will go into a trade, they will take on more risk for less reward. So they will add risk to a current position without getting greater returns in return. And that makes no sense. Why does it make sense risking $1 to make 50 cents? I mean, maybe you'll make it, but what if you don't? That means it becomes like the dumbest trade, right? You should always be looking for at least 1.5, preferably 2. So you're making $1.50 at least for every dollar you risk, preferably $2. Now, why does it do that? Because if you're actually setting up your stop loss and your take profit correctly and logically, then requiring a 2R means you're not going to get into trades with less than that. Now, why is this important? Because your win rate is not very important at all. What's really important is what are your average wins versus your average losses? What are your average wins versus your average losses? Because the greater your average win is versus your average loss, the more losses you can have and still come out profitable. So when you set up your trades from a risk-adjusted return perspective and you stop taking trades with less than a 2R potential, right? And we're not saying just put the take profit up there because, it says, it's 2R here. No. You've got to put your take profit where it matters, where it makes sense, right? But as long as you keep focusing on at least a 2R or greater, and you keep your risk to 1% or less, then that means every time you win, you're going to make twice as much at least than you lose on average. And so that gives you a cushion. That's what you're looking for. Because trading isn't about a single trade. You're not going to get rich in one trade, guys. And heaven forbid if you did, 1, it would be luck. 2, you probably wouldn't take profit when you should. You get too greedy being in it. You go from from in your mind, seeing a nice sized house to seeing a mansion, to seeing a Lambo, to seeing an island, to seeing, and your brain keeps working that way. Okay. So if you're approaching trading, you should be doing it from a risk-adjusted return. Stop the nonsense where every trade is do or die, because that's why you're not profitable. That's why you win every once in a while, but you lose almost all the time. And your account just looks like this. That's why. Okay? Let me see here. Real quick here, Tesla still continued up here, hit 440, almost 445 already. So around 319, when it was around 319 here on August 6th, I tweeted, why aren't you long Tesla? And I gave the chart at that point. I said, this is a triangle. Look for this to head up, right? And boom, we just continue going up. So, you know, you're looking from 319 to 445 already. So I don't know, what is that, 40%, something like that? Let me see here. Almost, yeah, just about, just shy of 40% so far on that rally in less than 2 months. I had more than a few people tell me why they're not interested in Tesla here. But the reason they weren't interested were narratives, personally held narratives, and lagging data. But why wouldn't you take that? I mean, you know, again, if you know what you're doing, right, on the charts, again, it doesn't guarantee you're going to be right 100% of the time. But man, oh man, in this case, that was a pretty clear triangle. And so, you know, your pattern target at least is up there around 440. At least. And then as this is developing here, to me, this looks like a leading diagonal, a 1-2, which means we're going to see this potentially breaking out toward 550, 560. Potentially higher, right? All-time high is right here at 488.54. So a lot of potential in that. But, you know, this is the thing. You know, I have people all the time, they're like, oh, you don't post charts and you don't post a chart. And when I post charts, they don't take them. They don't take them, right? What was the other one I posted? BNB. BNB at around 200 and some change, right? Wasn't that what it was? And it's up, it's headed, you know, it's up there above $1,000 recently. That's a 5X. Almost nobody took the trade. I do Tesla. Almost nobody took the trade. I post these, you know, multiple times throughout the year, and people want to whine about, oh, why aren't you posting charts all the time? But when I do post charts, you don't take them anyway. So what do? I save most of my charts for our students, for our subscribers at the Academy. It only takes one win to make up more than your yearly subscription for you to learn, right, with us. We've got a couple of trades right now. They're going to just potentially set up to make absolutely just so much more than what they pay for a year. Right? And we do this a few times throughout the year. We find these great trades that give really, really huge, much better than this. Trades that get multiple X's and whatnot, right? They don't happen every day, but when the setups are there, we're posting them. But see, people look at education as an expense. And if you're looking at your education, whatever it is, whatever you're learning as an expense, you will never get really good at it because you're going to treat it just like an expense rather than like an opportunity, right? You're going to treat it like an expense rather than an investment. So I'm saying this because, and you're not going to like to hear this. Many of you are not going to like to hear this, and you'll probably unsubscribe, you'll unfollow me. This is what it is. I expect it. But the reality of it is most of you are cosplaying. You talk a big game. I want to be a trader. I want to do this. But you don't do the things that are required to get you where you want to go. You don't. You don't put in the time, the effort, the dedication, the consistency, the focus that's required to learn and get good at this skill set. It's the same thing you'd have to do if you wanted to learn to play an instrument, if you wanted to learn to do some sort of art, if you wanted to become a swimmer, if you wanted to learn to drive a car, right? Trading isn't special other than it has the opportunity to return you quite a bit of profit. But it's not going to happen with you just sitting there saying, oh, I want to do it, or I'm going to do it, and then not actually doing it. I get this all the time. People tell me all the time, I want to be a trader. I want to learn to do it. I'm going to do really well at it. And then they don't even try. Or they'll get started and then they'll go, oh, this is a little bit of work, so I'm not going to do it. I got to be honest with you guys. It seems like, again, I've been doing this for 31 years, right? So I've been talking to traders and helping traders on and off for 31 years. So I've got a little bit of something to say about this. And it seems like today, like the last few years, the word work is really becoming a negative thing. People aren't really wanting to put in that effort that's required, the dedication, the focus to do the thing. They want to goof off. They want to play. They want to go on a Saturday night and hang out with their buds and drink beer or go pick up girls or whatever. And, hey, whatever. If you want to do that, it's fine. I'm not saying don't do it. But I'm saying stop lying to yourself and everybody else. We have choices to make all day, every day. If you're choosing to do something other than the thing you say you want to do, well, you're not going to get better at that thing you say you want to do. That's reality. And like I said, a lot of you are going to hear this right now, and you're over there mumbling under your breath, maybe yelling at me through your computer. I can't hear you. And I don't care if you are. Because I'm not here to tell you what you want to hear. Everybody else is doing that. Let them do that. You're supposed to be coming here to hear what you need to hear. Things aren't going to happen for you. You have to make them happen. Whatever it is in life. You absolutely have to. Okay? You can't sit here and go, oh, I wish I had taken that, or oh, I wish I was doing as good as this other person. Not just in trading, whatever skill thing it is, right? You can't be sitting there saying that and then talking about how it's everybody else's fault, how it's everything else's fault, how you just don't have the talent or whatever. I'm going to tell you what, right now, hard work beats talent every day of the week. There are some very talented people who excel in their thing that they do, whether it's musicians, whether it's some kind of sport or something, whatever it is. You do have people who excel, who have talent. You have a lot more people who don't have any innate talent in that, but they have the dedication, the effort, the consistency, the focus. They put in the hard work, and they've become exceptionally successful at those things. Here's the great thing about trading. You're likely never to become the best trader in the world. I won't. I'm not. I'm certainly not. I won't. But guess what? You don't have to in order to have a great life as a trader. But it does require that thing that you refuse to do. That consistency, effort, focus, dedication, hard work, right? It requires that. It is a non-negotiable. You can't buy a book and lay your head on it and expect osmosis to happen where you just kind of all that stuff that's in the book drifts up into your head. So you either have to get serious about trading or stop acting like you are. Stop lying to yourself. Stop lying to everybody else. Everybody else knows you're lying. I know you're lying. You know you're lying. Everybody else knows you're lying. Why are you going to lie? But damn it, if you're serious about it, if you're truly serious about it, you've got so much opportunity today to really do it. But I can't force you to do it. I can't do it for you. Neither can anybody else. It's all you, which means when you become successful, that's on you 100%. I have people all the time, you tell me, oh man, Chris, thanks to you, I did this. And I said, really, no, it's not me. It's you. All I did, I'm just a guy that does a thing. And I teach you guys how to do this thing. That's all. There's nothing special about me. I'm not magical. I don't have a crystal ball. But I've learned these things I'm talking about right now. And I found it really works if you do that. Okay? So if you sit there and you've been trading for a while and you wonder why you're still not consistently profitable, why your equity curve doesn't look like this, it's time for some introspection. Look at yourself. Be honest with yourself. It's hard. It's so hard for human beings to do, to be really honest with themselves. But if you can, that's your edge. Everybody talks about edge as all these crazy different things and how you read the market and all this silly stuff. You know what the real edges are? Consistency. The ability to be patient, right? Not lying to yourself. Because once you stop lying to yourself, you can start figuring out what you're doing wrong. And why is that important? Because once you figure out what you're doing wrong, guess what? You can change it. That's the key. You can't change it until you admit that you're doing that wrong, that you're doing whatever that thing is wrong. But you can't get to that point until you're honest with yourself. It's not anybody else's fault, guys. Crypto whales aren't stealing your money. Wall Street isn't manipulating you. You're just not doing the things you need to do. And so I think probably more so than just about any other skill set out there, trading really requires you to be honest with yourself. To have that honest conversation. I hope this is coming through. If it comes through to at least one person, then it's worth sitting here saying it. Okay? But I spend a lot of time talking about this stuff at the Academy, right? Because our students are really important to me. And it's not easy to do this at first because we're taught we don't have to. We're taught by the government, by society, that we don't have to be responsible, right? Look, guys, here in the US, I'm old enough to remember when car insurance was at fault, right? Somebody was at fault and their insurance would pay. You know what we have today? No fault. What do you mean no fault? If I'm driving out and you're T-boning me, guess whose fault it is? But no, my insurance has to pay for the repairs, at least on my vehicle, which means what? If I'm getting hit by somebody else, my insurance is still going up. It's the dumbest thing in the world. Dumbest thing. Right? That's just one example. But, you know, again, as human beings, we're not taught to be responsible. We're not taught to take responsibility for our actions and things we do. So what does that mean? If most people are unhappy, which we find they are, right? We do these questions and polls and things all the time, right? And we find that Gen Z is the most unhappy, most this, most that kind of generation, right? So if most of the people are that way, and most of the people aren't living the life you want to live, then maybe you need to do something different than what most people are doing. And in this case, that means holding yourself accountable for the things that happen. Again, I know there's some of y'all sitting there probably yelling at me at the moment. It's okay. You're going to do that until you figure it out. I hope you continue to come back, and maybe you continue to get upset, as I mentioned this time and time again. But I'm hoping that you do that because I know at some point, most likely, I'm going to catch you with an open mind. And you're going to go, oh, wait a minute. Okay. Yeah, I see that. And there's the spark. There's the edge. Now, what you do with that's up to you. Do you actually do something about it, or do you just wipe it away and say, oh, well, yeah, it is there, but I'm too lazy to change it, right? Or do you actually take that opportunity and go, okay, I want to get better at this thing I'm doing, my relationship, my marriage, my job, my business, trading, instrument I'm learning, my kids, my relationship with my kids, right? Do I want to get better at this? And if the answer is yes, which hope to God it would be, then you start focusing on what are you doing right now that is holding you back? What is you doing right now that is making it so you're not doing well with whatever it is? And then put together a plan. It's no different than trading, right? I keep telling you guys this. Why do I spend these times talking about these things which are outside of trading? Because I tell you guys time and time again, your brain is not going to split, right? It isn't going to go, oh, we're trading, so we're going to think this way. And, oh, we're doing something other than trading, so we're going to think this way. If you're a victim in life, if you have a victim mentality and you're always a victim and it's always somebody else's fault, it's going to bleed over into your trading. And you're not going to find out why you're doing the wrong things you're doing and correcting them and getting better. It's always going to be somebody else's fault, right? But if you can start with something tangible like trading, and you can go in there and you can start changing your mindset, accepting your responsibility in whatever's going on, right? In trading, in your trade. And then taking that opportunity to look in and go, okay, well, what do I need to change so that I don't do this again? So that I do the opposite, so I do better. And you start doing that, and you start doing that consistently in trading. Guess what? Every other area of your life will do the same thing. I promise you. It will, because your brain, that's the way your brain's going to start working. And you're going to stop seeing something as everybody else's fault. You're going to stop being a victim. And I'm going to tell you what right now, if you are a victim of that victim mentality, right? If you're a person that has that right now, this may not make any sense. And you may go, yeah, whatever. But I'm telling you right now, once you get beyond that victim mindset and you start doing what I'm talking about here with trading, and it leads out into the rest of your life gets exponentially, infinitely better. It can't help but to do it, because you constantly then figure out what you're doing wrong, and you go, okay, listen, well, they're doing this, but I have no control over that. But what am I doing that I can control, that I can maybe change things for the better for me? And then you do it, and your life gets better. Your relationships get better. Your job gets better. Your company gets better. Your trading gets better. Whatever it is you're doing. Okay? I'm telling you guys right now, everything I talk about today's show, it all pales in comparison to what I've been saying here the last 5 or 10 minutes. This that I'm saying is the most important part of this show right now, because it is going to have the greatest impact on your ability to be successful as a trader and your ability to be successful and happy in life. As long as it's everybody else's fault, you feel like you don't have control, you're going to be miserable. Life is miserable. Okay? Let me jump over here real quick. So that's Tesla. MicroStrategy. So strategy here. Here's my big look on strategy. Everybody's very, very bearish on strategy because it hasn't made a new high since November 18th. The week of November 18th, 2024, almost a year ago. What do I see? I see a range. I see the yearly pivot acting as that defining area along with this EQ here around 354 or so. That's what I see. What do I see off the low here? I see a possibility that we've got here. 1, 2, 3, maybe 4 right there, it looks like. 5. So this becomes a 1, 2 here. Let me see here. This is the pullback, right? We've pulled back basically just around 61.8, the golden pocket. So I'm really interested in what's going on right here. Can we get a bounce and a rally and a close back above the EQ here, right around this 355 area? If we can get a weekly close above that, I'm feeling pretty good about this low likely being the bottom and heading out. What does that mean in terms of projected targets from here? Well, if this is a 1 and a 2 here, wave 3 minimum expected target would be up here around 886. Wave 5 would be up here around $1,150. From this $300 area, that's a pretty good run up, right? That's almost 300% up there in price appreciation from right there. What can you do with that? Well, you can do a lot with that, right? Does it have to be the absolute top? No, but we're just saying from right now where we're at, that's what it looks like. Now we do need that rally and that break back out here above that 355, that close, that weekly close above that. And the more impulsive, so the bigger the volume, the larger the candle spread on the weekly that breaks out and closes above that, the stronger indication that this low, that this is likely the low here. So I'm liking what I'm seeing at the moment. But does that mean that's low? It doesn't mean it is, but it means I'm watching it for it to be, potentially. Right? So we'll see if we can get that rally up. The monthly pivot is right here around 358. So again, right around that EQ. So again, we're looking for that impulsive breakout and close, especially with the daily candle above that. That'd be great. Anybody got some strategy? Anybody thinking about getting strategy, or does everybody believe the whole, oh, it's the end of the world, it's blah, blah, blah. Everybody gets caught up in that narratives, right? And this is why I talk about, narratives likely leading you in the wrong direction, guys. Narratives are often based on two things: what we want to happen and lagging data. What we want to happen and lagging data. That's usually what contributes to narratives. Because most people don't understand that. Most people aren't prepared for that. They aren't set up for that. But if you understand price action, what's going on here, and how structure forms, how liquidity pools itself, right? How humans tend to act and react along the way, right? All these things. If you can do that, you got a significant chance to be really successful. You can use that, then use the narrative to confirm, either you can use that to either confirm or to rebut or rebuke the narrative that's going on there. Right? I see Fibbo's in the audience. What's up, man? Those of you that follow us, Fibbo views things the same way. Price action first and foremost. He can talk about what's going on with fundamentals and whatever a bit, because that's part of his job with the customers and everything. His day job, right? But like me, he's always about, listen, price action first, because that's the quickest way that you find out how people are feeling. It's the quickest way you find out how people are feeling are the markets. Because if I'm feeling scared right now, I can hit a button and sell whatever positions I have or short, right? If I'm feeling good about things, I can hit a button and buy more positions, right? Or hold on longer to a position that's been rallying, right? So the markets are the fastest way to figure out what the group as a whole feels. Fibbo says the fundamental people at work love him. I'm sure they do. But it's hard to convince somebody who is so stuck on fundamentals why they're hurting their own success. They don't want to hear it. They just want to believe that fundamentals tell them what's up. And some people are better than others at understanding a little bit about fundamentals. But I'm telling you right now, if you add in price action, you understand what's going on with price. How does it form? Why does it form? Where does it form? How does it extend? All these things. What's a correction look like? The various ways a correction can look. Why does price pull back to a certain area or push through a certain area? If you can get that in there, that infinitely increases your success with your fundamental analysis. Okay? Now, I'm not much of a fundamentalist. I'll push things like PCE and CPI and stuff like that for y'all because y'all want to hear that because you think it matters. And it matters usually for a knee-jerk reaction, but that's about it. The trend itself is already established. You don't get trend reversals based on news events. The trend is already in direction. It's already going. these news events, these number release or whatever, they just give you temporary reactions. And you can trade those as a day trader. As a scalper, you can actually trade those very well if you understand, again, structure and what's going on, and you can make that all happen at the lower time frame. There's no difference between structure and the way it works on a weekly time frame as the way it works on the 1 minute time frame. And I show this, 3 times a week. I do live trading with our students, and I show this, right? Because we trade the 1 minute chart, the 15-second chart. Made something like $1,500 the other day. Was it Wednesday? Thursday. Yeah, Thursday, yesterday. Well, I made $1,392 and some change. Roy made $1,700 and some change. He beat me there. But yeah, again, the same things that drive price action, the same way in which price action moves on the very large time frames is the way it moves on the very short time frames. Okay? So, let me see here. I want to look at, see what we got here. Come on. I want to check out Circle since it's started there. Okay. Let me see here. What do we got? Okay. So we're not coming out of the buy. We got 1, 2, 3, 4, 5 here. Okay. So what we have is this. 1, 2, 3, 4, 5. Now you say, oh my God, it's been going down and sideways forever. Yeah, well, look how quickly it went from here, right? I mean, you're talking about from that basically to the swing high there. Went up there, what was that, 357% in no time, right? In basically 18 days. So yeah, it's going to take some time for people to kind of, people first still coming in, then you haven't started to sell out. It takes a while for things to settle down, right? Let me see, let's point out the daily here real quick. What do I love about this? We pulled back to the S1 pivot, rallied up to the pivot. We're pulling back to the previous support resistance. My initial thought on the daily is, without looking at anything else, I'm like, can we hold here and break out higher? If I'm looking here, it looks like we may have a 1, 2, and then a 1, 2, 3, 4, 5, 3, 4, 5, A, B, C coming on the pullback here. So I'm watching this. I'm interested in what we're doing here now. Because this pullback right here on this circle CRCL chart, right? Look at this pullback here. Basically, you're pulling back. See where this wick was at the beginning? Came down and it's resistance here, and then big candle up through it, bounced on it, big candle through it, rejected, big candle through it, bounced on it. Here we come bouncing on it. This is a significant area. You can see there's a little volume node here. This is a significant area. If we can get a bounce from here, I think we start looking at this as like a 1 and a 2. And that starts looking up here around $200 for 3 up, $500 minimally here around 225. And this may be complete. Right here. So yeah, I mean, if we can get this start moving, if we're getting here above $139, if we're closing on the daily above $139, I think we're really open up that move toward that 225 at least. Secondary target be right here around 244. Whoops. And then potentially up here around, maybe around 270 or so. That's kind of where I'd look with Circle there on there. Onyx says, I'm actually monitoring Circle closely for an entry. I think it's a good thing right now. I think you should be watching it right now. Yeah. I would see if we can get a rally from this area here. Doesn't mean it happens overnight or anything, but if we can get one from around, I mean, it may dip down a little bit lower here, but if we can get one from around here, let me see here. We're barely not even 61.8 yet, but we're at the top of this low volume node. Now, if we break down through that, we could come on down here toward 118 or so, which is the 70.5, or even 115, which is the 78.6. We could still do that. But right now, this low volume node is holding. So if we can get some rally up through here, things start really looking interesting for that. I have nothing on Naka at the moment here. We're still hanging around that weekly pivot, weekly S1 pivot. Again, I still think this area that we're in is a potential good buy. I'm looking to potentially add to my position down in here as we get some little bit more movement. But basically, we're just kind of like a little slip below, still kind of sideways, overlapping price action for the bottom of this pullback. So I think things are looking pretty decent. Still on Naka at the moment. We'll see how it plays out. But, again, it becomes one of those trades where you go, okay, well, there are no guarantees in trading, but it sets up where it's at here. And it's looking like one of those trades you quite possibly take with proper risk management, of course, right? Because man, oh man, if you're right on Naka right now, the upside is potentially life-changing. Okay? Potentially life-changing. If you're getting in at Naka, at $1 or $1.50, somewhere around there, and it's heading up over $400, $500, $600, that's potentially life-changing movement there. Okay. Nakamoto, Diego. They're one of these Bitcoin companies. Yeah. They've got a Bitcoin treasury, and I believe they invest in other companies they think that's going to generate cash flow for them to buy more Bitcoin with. Yeah. Mama said, Naka you out. Jojo, you're my favorite person today, buddy. I love that reference. If y'all don't know who Ladies Love Cool J is, LL Cool J, then I feel sorry for you, son. Oh, man. Let me see here. And those of us that are 50 years old or so, we grew up with LL Cool J. So, Mama said, knock you out, right? It works really well. Let me see here. Was there another one in here somebody's asking? Try to find in here. I can maybe look up one or two more, maybe. I don't know if this person was talking about a crypto or a stock, but SYM. I guess we'll see if that's maybe a stock here. Symbiotic Incorporated. I love the rally here off the S1 pivot area. Let me see here. I'm not really too worried about this resistance. This is the weekly, so it's going to change on Monday. Yeah, see, if I'm looking here, this is 1, 2, looks like 3 waves down here. And since we got a breakout here above this, my thought is overall this is going to be corrective, and we're going to break out higher. And let me see. We could maybe get a triangle here. This is a great range down here, though. Wow, look at this great spring down there at the bottom of that range. So you got your move down here. Boom, there's your spring. Look at that. Look at that nice rally up. Boom. You hit it, you pull back, you broke out, you retested, and then you took off here. Now you're just pulling back on this previous kind of support area here, right? Look at that. Did we hit a new all-time high here? It looks like, I don't know. Let me see. 64.16. 64.14. So 2 cents over that there. Based on the overall height of this pullback, that would have a pattern target up there of 148.45. So a couple of X there, right where we're at. But overall, this looks corrective here, so I would expect to break out higher, and then that pattern target based on the height of that pullback there is up there around 148.5 or so. But if we do get, say, some move up here, and then the pullback, and then go, then we'd be looking for even higher rally beyond 148.5. But not hating that, not hating it at all. Saw somebody talking about gold. Gold's another one that I told you all publicly and through my weekly, my daily newsletter, well, my weekday newsletter, market breakdown, talked about this triangle here. So, from 3,300 basically up here to 38.20. It's been a great move. Crypto Slab, you're welcome. So yeah, this has been a nice strong move up here. It gives us a 1 and a 2 here. Let me see here. This looks like it may want to push out higher here. Let's zoom in a little bit. That daily stochastic RSI is almost reset and oversold. RSI remains bullish above neutral and actually bullish, strongly bullish and overbought here right now. So that's a good thing to see if you're long. Look at that 4 hour. 4 hours got 3 waves on the pullback here. We just broke out above this second wave. So it's corrective. Ultimately should head out higher. Here, it's possible this could just actually be a triangle here. So it looks like this could be, let me see. Let's get that done. Could be an A and then 3 waves up here for a B, then a C, then a D, and then an E. So it looks like there might be a bit of a triangle going on here. And again, based on the height of the pullback, they'll give us a pattern target at around 38.69.5 or so. If we can get a rally up here that doesn't break out higher and pulls back and stays above wave E here, we could be looking at something more along the lines of, let's see here. A little bit higher up here, maybe 38.93, almost 3,900. So yeah, this does look like a triangle here. And so since it's a triangle, we absolutely have to break out above this swing high here. If we were to stop short of that swing high on here, which is 38.2460, and then pull back down below what I have as wave E here at 37.7940, that'll invalidate this as a triangle. But right now that's what it does look like. So yeah, so it looks like 1, 2, 3, 4, 5, and then A, B, C. So that's a 1 and a 2. And then here, if this is going to be a 1 and a 2 here, see, it gives us wave 3 right there. So it would make sense that this would be, 3 up, and then 4 is a triangle here, and then 5 heading up there, at least toward that pattern target area. Yeah, that parabolic gold chart was nice. Yeah, I think, like I said, I posted this on I believe I posted it there on Twitter, on X, and I was like, hey, listen, we've got this, the 12-month, the yearly. Here we go. And so 1, 2 looks like 3, 4, 1, 2, 3, 4, maybe 5 finishing out. And the way that commodities work is that your fifth wave is usually your strongest wave, largest wave kind of thing. So when we're looking here, wave 5 is the largest wave. So likely, reaching out, we could see it potentially even heading up here toward 4,700. But ultimately, I'm thinking this is quite likely 5 waves up it'll be here. And what does that mean? That means a big, drawdown, lengthy drawdown, right? Time-wise. By the way, gold's best year was 136% right here in 1979. I did that because I made a post about Peter Schiff, who's all up gold's rear end right now, in case you guys don't remember. And talking about, he's excited. Gold's up 40 somewhat percent. He's giddy, right? It's up 40% this year, which is significant for gold. It's the second largest positive year gold's ever had, right? But here's the thing. Bitcoin's worst positive year was something like 30 somewhat percent. So just a little bit lower than what gold is in its second best year ever. Right? This year we're like 20% or something, but we've still got the fourth quarter to go, so we'll have to see how it ends out. And we'll have to see how gold ends up. Does gold end up 40% up, or does it take a hit before the end of the year and pull back? But Schiff is very giddy. And again, for good reason, if you're into gold, for gold's performance this year. But these things, when it comes to commodities, these big performances like this, these outperformances, are usually the end. It's the peak fear, right? Commodities reach peak price usually through peak fear. The fear of global war, the fear of food shortages, the fear of, whatever it happens to be, right? The monetary fear. So you got gold, right? And it's the apex of fear. When fear hits its most extreme, that usually commodities are finishing their run. Okay? But going back to Bitcoin regularly has hundreds to thousands of percent returns. That's par for the course, right? That's not the exception. Gold's 40% run this year is the exception to what it usually does. Bitcoin, just generally is multiples of that. So, when you want to cherry pick, Schiff, when you want to cherry pick and say, oh, gold is doing so great, gold's so special, blah, 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 and you're just looking at a year or a couple of years, rather than looking at the totality of what's going on and other measures. But a lot of what he does is for engagement, but some of it he probably believes. Good times, right? Let's jump back over here and see what Bitcoin's doing. Yeah, so we want to see if we can get some movement up here now. 110.713.96 is the first one. We want to get close above that, and then above 114.042. And if we get that, we're looking up here around 131.165 is kind of like the next real target. 126.548 and then 131.165 would be those targets toward the top side. So that'll do it, guys, though. I hope I've said something that's really made you think. I want you to be better. I want you to be a better trader. I want you to be a better person. I want you to have a greater life, a more fantastic life. And, the only way you can do that, I can't do it for you. Nobody else can do it for you. You're the only one that can do it. But it starts with the way that you approach things. How do you approach the things going on? Right? So, as always, remember the only thing you control is how much you lose. So please keep working on that risk management. Yeah. Other than that, I hope you all have an amazing weekend. I hope you don't sit and stare at charts all weekend. I hope you get out and do some fun stuff or just some stuff to unwind and get away from it. All right. I'm currently in a micro E-minis S&P trade from 66.85.50. We're at 66.95 right now, so we're up about 10 points. I'm currently up about $475. So yay, that's where we're at. You guys have a great day and a great weekend. Follow me on X if you're not. Subscribe to the free newsletters that I have. You're going to find the stuff that you need to hear in all of that stuff, okay? You can do that over at themarketbreakdown.com. It'll pull you into Substack. And when you sign up for that, you can sign up for my other ones like Traders Daily, Traders Edge Daily, Applied Socioeconomic Theory, stuff like that. And then, of course, join us, members.texaswestcapital.com. Make this year your greatest year. We'd love to help you guys out with that, all right? Thanks for joining in as always. Hit the thumbs up, hit the like, hit the subscribe, follow along, share the link to the stream here. And I will see you guys out and about. Take care.
Trading tip: always manage risk before chasing gains.